The next one that we have here, you are told that from 2019, right, to 2020, the directors made a deliberate decision to change the policy on the distribution of profit in the form of dividends, right? Explain this change, quote figures or calculations to support your answer. When you are answering a question on financial indicators, it is imperative. If you look at past marking guidelines, you will see when they say quote figures, you have to go back and find those figures to support your answer. Those figures are there. You don't thumbsuck them. They are given. You will find them in the given information. You will use them to support your answers. Okay, let's see what we have here. Amongst my financial indicators, I am told that 2019 to 2020, right? My earnings per share in 2019 was 56 cents, and my dividend per share was also 56 cents, right? If I look at 2020, my earnings per share was 60 cents, but my dividends per share was 33 cents. Now, the question was, there was a deliberate decision to change the policy on the distribution in the form of dividends. There was a deliberate decision. Let's look at what happened. Right? So basically what they're talking about here is your dividend payout policy. I repeat, your dividend payout policy. Let's look at it. 2019, you took your earnings per share, which was 56, you took your dividends per share, which was 56, over your earnings per share, which was also 56. Let's verify those amounts. You took your dividends per share. So remember, it's dividends per share over your earnings per share. Remember that. So you took your dividend per share, which was 56, over your earnings, which was 56, multiplied by 100 to express as a percentage. That's what you are doing. You multiply it over 100 to express it as a percentage. So there we go. You got 100%. That means whatever was earned was paid out in the form of a dividend. So the company had a dividend payout policy of paying out 100% of their earnings. Right? Okay. Now let's go to 2020 and see what happened there. In 2020, your earnings were 60 cents per share and your dividend was only 33 cents per share. Okay? So let's do our calculation first. You take your dividend per share, 33 cents, over your earning of 60 cents per share, times 100 over 1 to give you a percentage of 55%. In other words, what are we saying? We're saying that the company only paid out 55% of its earnings. Its payout policy changed from 100 to 55. Clearly evident. What are you doing? You're working out your dividend payout policy to support your answer. Remember I said quote figures or calculations. Quote figures or calculations to support your answer. Right. Now, this means that the company is retaining income. Okay? They are retaining the income. Why are they retaining the income? Because clearly you can see last year they paid out all the dividends, all the earnings in the form of dividends to the shareholders, but this year they only paid out 55%. In other words, they have plans to do what? To expand as they are retaining more of the profits. Is that the only reason that companies retain income? No, they also retain income for what we call equalization of dividends and What do we mean by this here? By equalization of dividends, we mean that they try to keep retained income. In that way, if there's a lean year, they can still give the shareholders a decent return on the investment, so they keep their dividends equal over a period. That's what we mean by equalization of dividends.